Hey traders, welcome to this video. Will Sebastian here from The Trading Mentor. Don't forget underneath, if you want to learn to trade for income, I'll be teaching live on charts on Zoom shortly, around noontime GMT with the whole academy on board. We're going to cover some really important lessons. As we do every day, we do about 10 hours a week live. So links underneath if you want to do that. Today's video is going to be all about reading financial news in the most effective way. And that means understanding that you don't need to be a master of economics, you don't need to be some professor of Keynesian theory or, whatever it is. You just need to be reading the right stuff from the right place at the right time and deciphering what that means in very simple terms. So there's a great source we use and there's a great way we use that source. I'm going to go over that because I do this every day. Mostly when I wake up and when I get on charts in the morning for London session, I will go for a news and market sentiment, and I'll know immediately where I'm at. So let's go ahead, let's cover it together, and let's learn a cool little trick. So the best place for financial news, or really where I get my financial news, is FinancialJuice. The reason why is because they are very good at summarizing very quickly the actions that a central bank is likely to take. Because remember, if you're trading things like Forex, every single price movement is going to be ruled in the long term by the actions of central banks. Because as you will have heard me say in many of my videos, central banks rule Forex markets because they control the supply and the demand of the money effectively. If rates are higher, okay, people don't borrow as much, they don't spend as much. If rates are lower, people borrow more, they spend more. It's as simple as that. Mostly when you've got higher savings rates, people save because the returns are higher. Of course, as those rates comes down, people stop saving and they use their money elsewhere. So instead of being, like I said, trying to be a professor of economics or a genius and sitting there and going, oh, I'm going to dig into every single jargonistic term, economic term, and I'm going to understand exactly what it means in full, it's unrealistic for a lot of people and it's completely unnecessary. Because you might have a piece of data like the University Michigan 5-year inflation prelim. You don't need to specifically dig into the history of the university and the 5-year part and all these kind of things. You just need to know what impact that might have on a central bank. Will it cause the Federal Reserve, for example, to stick with their policy, change it quicker, change it slower, and everything like that? Like I said, all Forex moves are going to be ruled by the actions of central bank because they control the supply of money inside an economic zone. Canada, you've got Canadian unemployment rate data here. That can affect the decisions the central bank might make or the Bank of Canada might make and how, therefore, the money is then distributed within that economy. Of course, if you've got more people employed, people spend more money. Okay, if they're unemployed, people spend less money. So those kind of things, you can dig into, or you can simply know what the central bank is going to do in reaction to that. So like I said, if you've got people if there's more employment, there's going to be more spending, which isn't good for inflation, because if people have got more money and they're spending more, businesses can put their prices up. Conversely, if people are unemployed, they won't spend as much. So it does a bit of the work for the central bank in terms of tightening their monetary policy, because normally they would put policy up or rates up to have the same impact. So FinancialJuice, like I said, is very good at not digging into specifically explanations for the jargon because it's unnecessary. Instead, you can just get a simple overview of the direction in which a central bank might go. So, for example, the Bank of Canada, this is really useful because they've just started doing this. You can see the probability of a cut in this instance here, okay, and the meeting dates are listed. And it's got the implied rate and everything like that. So you can get a simple glance of where a central bank is going. Of course, if they're more likely to cut and they're likely to cut quicker, then, for example, if you had the Bank of England was going to cut at a higher probability than the ECB, you might find that the money moves away from Great British pounds and into euros, because of course, if the Eurozone keeps their rate higher for longer, investors, foreign cash investors and domestic, will get higher returns on their euros, and therefore they would say, okay, well, I've got pounds now, I'm going to get rid of those and I'm going to put them into euros. All of this is dependent on other bits of macro and micro data that come out. But like I said, there's a really good split to make there, because lots of traders struggle so much. So many people who I've taught, and even myself at the beginning of my trading journey, I dug so much into exactly what those individual terms meant. And I'd spend loads of time trying to understand it, exactly what the effect will be, and everything like that. And sometimes you'll get data where it supports one way, i.e. a cut, and then the next piece of data supports a hike, and you'll just get terribly confused. And like I said, luckily, you'll then get a summary on FinancialJuice. Is it a mixed bag? Is it supporting a hike, okay, i.e. hawkish, or dovish on cuts? And there's some really good summaries over here. You can see the pound saw initial pop, but it's yet to see a decent follow through on the move. It's not full of jargon. It's not difficult to get, and it's the same for all their news reports. Within that, you get lots of speech come out. Again, UK Chancellor Hunt, today's growth figures have proved that the economy is returning to full health. So instead of understanding, the figures specifically, you already know what they likely have represented. So if you've got better growth figures, you might have a rise in the FTSE, the UK stock market, which is exactly what you saw, and perhaps a drop in the pound, because it's more likely that rates will be dropped quicker. Okay, so again, a nice summary there. It says nothing about the jargon of GDP or growth figures. It just gives you a summary of exactly what you need to know, and it's the same for all economic zones coming in all day. All right, so really, really easy to get. But I would definitely say, if you want to open up charts, or wherever it may be, TradingView MT4, and get a glance of what's going on now via price, and then go ahead and open up FinancialJuice and get an idea in terms of sentiment in a nice, concise, and easy to understand way, then I would probably go and use FinancialJuice. It's all about making it simple. Lots and lots of traders think it's got to be terribly hard. You do have to be a professor of economics, is what lots of people think, but it's absolutely not the case. It's not hard to get that central banks rule Forex markets and many other markets, bond markets, etc. And getting a good summary in a nice quick period of time so you can understand what way markets are likely to go is essential. Instead of wasting loads of time confusing yourself, misinterpreting data, misinterpreting terms, economic terms, and getting things terribly wrong. So that is how I use news at this point. If I was trying to look for a short side case on a push up, i.e. here, within this long-term downtrend, then I would be very interested in what way the central bank of the US, the Federal Reserve, is likely to go versus the ECB, okay, which is, terribly important. Similarly, if I wanted to know, perhaps it was pound CAD, for example, who is more likely to cut, that would then support the pound CAD short basis. If the Bank of England was more likely to cut at a sooner period. At this point, you can see they're very well aligned, which is why I'm short the pound CAD, because I know there isn't a real big push up or down on this particular pair, and you're heading into lots of key areas here. Plus, you've just had UK data ahead of Canada. So I would check the sentiment. Where's the central bank going? Where am I going to go on the pair? Now, don't forget, we teach live on charts every day. I'll be live on Zoom teaching the whole academy. Fantastic people, fantastic strategy, and we're 5-star rated. Don't forget, if you want to do that, it's underneath. I'll also leave a link for FinancialJuice under there too. Thanks for watching. See you in the next one.